people. Welcome back to another episode of the Navvai Shift. It's a little bit different today. As you can see, there's quite a few people here with us today. They're all from Scienaptic. But I think the main point of contact that we had was with Patrick McElhaney. He's the Chief Growth Officer at Scienaptic, and we have a few other members with us today. I think it's best that I pass it over to you guys. If you all could just introduce yourself, that would be amazing.
Absolutely, Josh. Patrick McElhaney, Chief Growth Officer at Scienaptic. I'm based in Madison, Wisconsin, where the summer is starting to slowly fade away. Glad to be here and looking forward to talking about AI, looking forward to talking about Scienaptic and really how AI is starting to impact the credit union space, which is our primary market. I'm looking forward to this discussion.
Yeah, perfect. And I know, Patrick, I know you've spent over 25 years in the credit union space. So I kind of want to ask the first question. How is the passion still there?
It's absolutely there. But when you say 25 years, it starts to make me feel a little old. So, but yeah, it's been a little over 25 years. And if I think about the last three organizations I've worked for in those 25 years, they've all been either a mutual company, a cooperative, or now a CUSA, which is a credit union service organization. All cooperatives in some form or fashion that truly serves the market which is credit unions. Credit unions are a cooperative spirit, right? And when you think about, in my mind, and you talk about my passion, the best selection for a consumer for their banking or financial needs or interests, to me, a credit union is their only answer. And I say that because credit unions do not have to worry about shareholders paying dividends. I mean, credit unions are there for their members. I mean, a credit union is so special because, as you know, every member gets a vote. Every member has a single vote for a board of directors, which then, guide and lead that organization. There's no worry about shareholders. And it's that true cooperative spirit. And as you spend more time with credit unions and as you look at this industry, it's not even an industry of competition. Yeah, sure, some credit unions compete with each other, but it's more of this competition of, what, we're going to compete, but we're going to help each other, right? They call it coopetition in a way. And when you work in an industry like this, and when you can align your personal values to what your occupation is, that's amazing. So that's like what keeps me going. That's what keeps me driving, because every credit union, if you look at every credit union's mission statement, regardless of what it is, it's all about helping their members. It's all about this people helping people. And I think this world needs kindness. This world needs that focus of people helping people. So that's what keeps me going every day. So hope that answered your question.
Definitely did answer the question for sure. But Patrick, I kind of have to ask, how has your leadership style kind of evolved since stepping into Chief Growth Officer role?
It's interesting. I share this story about everybody has a leadership story, right? From early on to now. And I guess when you get to be at my phase of the career, this analogy, some people will relate to it, some people may not relate to it, but I've shared it with many, many people. And I love music, I like rock and roll music. So if I'm in a band and I'm the leader, I'm the drummer. Because as the leader, I don't believe you should put yourself first. You shouldn't be putting yourself out in front of the audience. You should be putting your team out in front of the audience. It's your team is the lead singer. Your team is that guitarist. Your team is that bass player. You're just behind the scenes making sure that they're successful. And I think as I've moved into this role, it's more about enabling that team to be successful and then looking strategically for opportunities throughout the marketplace to help them even expand their reach, expand their knowledge, so they can continue to be successful and they can continue to drive the business. So I think early on, like many leaders, you're gung-ho and you want to be successful and you want to get out there. But I believe that as a leader, you have to definitely put your team first. And especially now with AI and how AI is really driving as a driving force now, or starting to be a driving force within the credit union space. It's really imperative that we keep looking ahead to see what is that next thing going to be that AI is going to influence. And you do that on behalf of your team. And when you start to find those things, then you share that back with the team. So I think in this role, It's really making sure I'm putting my team first, but then it's looking for those, what are those next opportunities going to be, partnering with other executive leaders within the organization to look for those opportunities, and then making sure you're opening the avenue for your team to be successful. So that's kind of my own personal leadership style, and how I feel is really kind of morphed into how we're driving this AI solution through the marketplace.
And what moment convinced you to join Scienaptic?
Wow, that's a great question. So for many of us, all of us, and people listening, even yourselves, you get a lot of phone calls. You get a lot of emails from recruiters. Hey, I got this really cool opening. I got this great opening. And I never accepted them. Never. It would be delete, hang up, don't respond. And out of the blue, and either I didn't recognize the phone call, what have you, I answered the phone and it was a recruiter. This person started talking to me about this opportunity. I wasn't necessarily looking. However, again, it goes back to what Scienaptic's mission is. It's fair and inclusive lending. We're helping credit unions extend credit to individuals otherwise that would be missed by traditional bureau scores. I mean, it's truly helping credit unions reach those people that otherwise would get stuck going to a payday lender or get stuck into a cycle that's just very dangerous and not healthy for them as it relates to their financials. And so I started digging into Scienaptic. It's an organization that truly is helping credit unions fulfill their mission. And not to say that any other of my employers weren't doing that, but there was something special that was very specific around this fair and inclusive lending concept, and this concept of, we're really helping these credit unions. I mean, you can see it in the data that we're helping these credit unions achieve their mission because they're extending credit and they're helping people when they really need the help. And again, when you have a fundamental belief of this cooperative spirit, you have a fundamental belief that we should all be on this earth to help each other, it seems like that was a pretty good alignment. So decided to take the call, met some of the folks, probably some of the smartest people I've ever worked with. So, which is a little scary for me, but yeah, they're the smartest people I've ever worked with. That's really what made it kind of a no-brainer in a way for me. And yeah, so it's been a great experience thus far.
That's amazing, honestly. And as you kind of mentioned, probably had recruiters calling off your phone every other day. But I think kind of when you're looking to kind of join into a new workforce, you kind of have to ensure that the company you're working with, the mission aligns with your own values and goals. And when that synergy is combined, and as you said, it's a no-brainer.
Yeah, I mean, you get into your sweet spot, and everyone is trying to find that sweet spot. You can align your career and what you're getting paid to do with something that you truly believe in. I mean, that is kind of the ultimate goal in my mind. It'd be great and to align your job and know that you're actually making a difference, because we all should do something to make a difference in this world. Yeah, so it's been a really good match.
That's amazing. And Patrick, I have to ask, looking back, what are your biggest personal growth lessons you've actually learned within this industry?
Man, now I have to go back a ways. Personal growth. I'm not going, excuse me, I'm not going to date myself, but I will say that from a personal growth perspective, you learn certain things along the way as that makes you a better leader, that just makes you a better person. And a lot of that aligns back to leadership, not necessarily technology in my particular situation. So I've always, number one, when working with people, and we should all go by this particular phrase. It's a very simple phrase. It's seek first to understand, then to be understood. Right? That is, and I did not make that up. That came from a very, very old leadership book many, many years ago. But you look at that particular strategy, seek first to understand, then to be understood. I think for me, personal growth wise, that's been a tenet that I've tried to live by, that I've learned how to do that early on. I would say as a leader, you wanted to make sure your voice was heard, and you still need to make sure, but it's how you do that. I also believe that when you look at this particular industry, this industry has an impact not only on the members that are served by the credit unions, but I think this industry also has an impact on people that work in it and people that support it, whether you're a vendor, a partner, and whether you're a credit union employee. you can't help but not to embrace a cooperative spirit. And I think that cooperative spirit then not only is part of your career, but I believe that cooperative spirit for many people transcends into their personal life and their personal growth. It has you thinking about how you can, make your kind of circle of influence better or stronger. And what are the things you can do in your own community, in your own sphere to just improve things? And I believe personally, in my personal growth path, this industry has really driven that for me on a personal level and even on a professional level as well. Always trying to make sure that as an organization, you're looking to do things, not just make the sale, but as an organization, how do you give back to a community? How does your organization truly have some impact, whether it's, through volunteer work, or whether it's through investments into other community activities, those types of things. So I really think this industry's helped me grow as a person, not just personally, but also professionally.
The mix of values and growth, it really sets the stage really well, because like what you're doing at Scienaptic, it isn't just technology. It's technology that makes credit unions more like credit unions. Like it's incredible.
Yeah, it's, we have a lot of discussion around with credit union people about AI. And, there is this fear that, oh my gosh, AI is this robot and it's going to replace me. It's going to replace all of my underwriters. But that's just simply not the case. When we talk to our clients, we talk to prospective clients, AI is there to enhance and actually make a person's job better. It makes it easier, and it really allows them to invest and spend the time on strategies and working with members that truly need the help. AI just really alleviates the mundane tasks of, let's say, a credit union underwriter, and then allows them to focus on the things they should be focused on. So it's making their job easier, and it's not replacing them whatsoever. It's actually making them more effective and more efficient. And so, once you have those discussions and once people start to understand that, they can see that, wow, we're about truly AI helping you and not replacing you or, doing some evil things, right?
Yeah, no, definitely. Yeah, I know, Patrick, I know you've actually said AI makes credit unions more credit union. So I kind of want to get dive a bit more deeper into it and get, what did you actually mean when you said that?
When you go back again to the mission, as I mentioned earlier, and what our solution does, the credit union movement and the credit union space and every credit union in this country is focused on how do we reach more members? How do we really help our members in time of need? And how do we make sure that what we're doing as an organization is fair and is inclusive? And that's what AI really does. If we are helping that credit union reach out and provide credit to someone, and it stops them from having to go to a payday lender or, God forbid, something else, they're fulfilling their mission. They're doing what exactly they were created to do. There was, and I'm going to go way back, and nobody probably even knows this, but creditors are designed so that they could help, people that are in need not go to a loan shark to get a loan, right? I mean, credit unions were developed so that, at that point in time, many, 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 many years ago, blue collar working class people could get a loan and they needed to buy a refrigerator or something like that. And they wouldn't have to go to this person that's going to charge them 200% interest. It was, the genesis of credit unions was all about this cooperative people helping people. That's what we're enabling credit unions to do today with this AI technology. We're searching for those people. We help the credit union determine and find those individuals that have applied for credit to give it to them. And we do it in a way, which is even better, by not putting the credit union at risk. Because without going in really deep into these AI algorithms and machine learning, we are able to take that technology, extend the credit for people that really need it, and do it in a way that is not putting the credit union at harm by increasing their delinquencies, increasing loss ratios. And that's the beauty of the AI technology. And that's a great, great synergy when that takes place, that technology is able to do what the credit union is helping them to do. That technology enables that mission, but it enables it in a way that does not harm the credit union financially. It only helps them. So I get a little passionate about that because it makes the most sense. We have to make sure that any technology, whether it's Scienaptic or anybody else, now you're getting me on a pedestal here, is truly helping credit unions fulfill their mission. It's not about just making money. It is about expanding this breadth of products and services that help this cooperative spirit and help this cooperative spirit grow within not just the United States, but to me, around the world.
Patrick, I can definitely feel the passion, and I want to delve into the passion a little bit more. Can you share like a success story where AI has helped a member get approved who might have been declined before?
Yeah, absolutely. I mean, I think there are many success stories. And when you think, so for example, we don't always necessarily work with individual members, right, at a credit union. What we do is we work with the credit unions to ensure they're using this technology to extend the credit. However, what we have heard, and when you talk to underwriters, what they tell us is, because at first, underwriters that have been doing that job for a long time, they get into a certain rhythm, into a certain cadence of how they do their job. And it takes them a little while to actually get out of that. It's change management, because AI brings a lot of change management to a credit union and to an individual. Using an underwriter as an example, I've been doing my job for 15, 20 years the exact same way. And I've been extending credit and making loan approvals, making loan denials in a very particular way. Now, all of a sudden, AI comes into play. And once they embrace it, once they understand it, they find that, wow, I'm truly now able to spend my time and that's quality time, working with some of my members that truly need financial help. For example, in those situations, and we've heard from underwriters, it's not just, hey, I was able to approve a loan that would not have normally been approved, but it's when they have the time, and this is what we hear, is that underwriter now is able to take the next step and say, wow, you know what? We're going to get this individual member that just a single parent that needed a car loan because of a car accident, but now we can get them into some of our financial planning tools, and we can sit down and we can set up a budget for them. We can now put them on a plan that's going to help them save money, because previously there was such volume at some of these credit unions that these underwriters were working on, they didn't have time to do that. So now what we hear is that underwriters now have much more quality time they can spend with members and look for the other things besides just extending the credit that this member may need. And many times that's like financial planning. It's helping them get on a budget, and it's helping them put them on a right path so that they don't fall into any other behaviors that could get them into trouble. Those are really kind of the stories that we tend to hear.
So it's that hand-holding process, ain't it?
Yeah, absolutely. Because let's face it, sometimes even our technology is going to say, yeah, you may not want to approve that loan. On occasion, you have an underwriter that can have a one-on-one conversation. Maybe they tend to help them out. So it's a great example of AI is not replacing the human, but it's working together to find that solution and that best solution for the member.
That's great take, and I appreciate you answering. So how do credit union leaders respond when they see that AI is helping them live out their, corporative values?
They love it, quite honestly. What happens is let's take a step back. 5 to 10 years ago, when you went to any credit union conference, you heard what? It was all about, 10 years ago, 5 years ago, it was all about big data. Oh, you have to do something with your data, big data. Well, now it's AI. It's all about AI. Credit union leaders, CEOs, chief lending officers, CFOs, you name it, are starting to embrace AI. And the ones that have embraced it, especially the ones that we work with, we have over 150 clients now using our platform. they actually become zealots. They actually become true believers. And in many cases, we have some of our clients that, because they've had such success with the solution, they want to invest with us. But that's a whole nother story. I won't go there. But CEOs and C-level leaders are seeing that value. They become zealots of AI. And then those are the people that you actually see now at conferences, participating in panel discussions, trying to share with more of their peers the value that AI is bringing. So now they love the results. They love to see the growth. They love to see that they get growth without increasing delinquencies. And they love the efficiency. And oh, by the way, it also helps with fraud. These models and these AI models aren't just helping with efficiency and growth, but they also help with fraud. So when you see those three things being positively impacted, that's what really helps leaders buy into it. But then that also then becomes an avenue for them to spread the word to more credit unions that, hey, don't be afraid of this. This actually works because here's the results at my particular credit union.
Yeah, no, definitely. 100% I agree with you. And I think, especially in the C-suites, who might be a bit more hesitant or apprehensive to actually adopt AI, I think we're getting to a point where they kind of is actually have no choice.
That's a great point. I was doing a presentation a couple weeks ago at one of the credit union league events. And you always get this mix of credit union staff and directors. Sometimes board of directors have a little bit of a different view than staff. But, there is definitely this fear of AI and what it can do. No doubt about it. And you have to ask those questions. And, some of the questions are great. Some of the questions, no question's a bad question. One person, I think, they had asked me, or they made a comment that they felt AI was going to be the next nuclear bomb. And they had said this in the session. It was kind of comical, but you have to answer their question because it's a legitimate concern. So I do think that it is absolutely here to stay. I tell people they need to get on the bus, because if they don't, then they're going to get left behind, and they're really going to truly impact the service that they can provide their members. Because the one thing we haven't touched on yet, if you think about what AI can do, is responsiveness. I mean, you're talking, you get an immediate decision on your loan. I mean, within milliseconds. I'll say our decisions are faster than Amazon. I can't really say that, but it is. That's the consumer experience. That's the consumer expectation. They want an immediate decision. It's instant gratification. Well, that's what AI and that's what our solution can provide, is an immediate decision. I mean, in fact, many of our clients are providing automated decisions and approvals of about 70, 80% of all their loan applications that come in. So that's it's fantastic.
No, 100%. It's definitely fantastic for sure. I think it's like, say, for example, you're on the highway driving a Lamborghini, and the people who are not adopting AI are just jumping on a horse. Really and truly.
Yeah, exactly.
You can't really compare. But yeah, I think living out those values also means matching the speed, of course, and expectations set by fintechs and neobanks as well. But how has the members' behaviors changed with same-day expectations?
It is just that, again, they have this "I want it now" expectation. And, I always have talked to credit unions, and I tell them, when they think about their digital experience, when they think about the member expectation, whether that's regardless of what channel it's through, whether that's through a branch, whether that's through a digital channel, whether that's through a call center, you name it, regardless of the channel, a member or a consumer is going to compare their last best experience, regardless of the industry. What was their last best digital experience? They will use that as the benchmark for the experience they expect from the credit union. And if you don't meet that benchmark, they're going to feel like this was a bad experience, because that's just the expectation that's set. And so now it's not necessarily just getting that loan decision. Then it becomes speed to fund. And how do you fund that loan as quickly as possible so that, you're meeting that essentially that benchmark for them, that the member has, right? And we all have had great digital experiences online or in person. We've all had horrible digital experiences. We as human beings now expect things immediately. And so that member expectation is, I want my decision right when I click the submit button, give me my loan decision, and then I want my funds as quickly as possible. And so
I was just going to say, Patrick, because you brought up you mentioned speed. I was just going to ask, do you think speed will become like the deciding factor in member loyalty over like the next few years?
absolutely, 100%. I think it's one major factor, because when you look at the different, demographics coming up, that instant gratification is something that they have grown up with. It's just become embedded into everybody's DNA. So I think that will be a huge loyalty factor, because if a credit union does not respond quickly, think about how many other offers people are receiving on a daily basis, whether that's through the digital means, whether that's still through mail. You can apply for credit and get a loan or get financial services anywhere. Like you said, think of the neobanks, think of Amazon, think of all these other providers that aren't just traditional credit unions that are providing financial services. I mean, you can get something at Walmart, you can get something at Costco, you name it. So if a credit union doesn't have that speed to market mentality, then the competition is going to eventually win out. Because let's face it, big banks, fintechs, as you mentioned earlier, the neobanks, and then all of a sudden open banking becomes this issue. There's just going to be a plethora of opportunities for people to get funding, to get financial products. And especially now that, credit unions are used to having members as part of their, to be their PFI, right? Their primary financial institution. That always doesn't happen anymore. So for credit unions to succeed, that experience and that speed is going to be fundamental if they want to keep members as part of that, their preferred financial institution.
Yeah, I totally 100% agree with you. And just kind of touching on that, Patrick, looking ahead, how do you see the competition with fintechs and banks shaping the credit union landscape as a whole?
That's a great question. I think that there's just going to continue to be this growth of AI. I think you're going to see more fintechs and more, I say fintechs and other organizations start moving to, agentic AI, which is what we're moving to. And not to scare anybody, but then I actually heard this the other day for the very first time, and maybe you've heard it as well. Q Day. Ever heard of Q Day? The day that the quantum computing actually can now bust all of the algorithms, provide security. I mean, it's a crazy thing. So I think what you're going to find is AI is going to take the next step from fraud prevention. I think fraud prevention is going to be greatly enhanced as AI models and data science around AI continues to evolve. I think it's going to be fundamental. I think it's going to be critical. And I think you will see more growth and a lot more sophisticated fraud solutions hitting the marketplace, which is a good thing. Our investors have told us and asked us to focus on fraud, and we are. We have various fraud solutions. I think you'll see a lot of that into the future as well, because the downside of AI is, and unfortunately, as we all know, fraudsters, they're pretty smart people, which really kind of sucks, but they are, they're smart.
They're getting super smart now, aren't they?
They are. So we'll, I think so that will be counteracted with, other organizations like ours and others really focusing on how do we take that next iteration of AI for fraud protection and for fraud tools and solutions. That's where I personally kind of see it headed.
Patrick, have you guys always been like AI led or AI driven as a business?
Yeah, this organization was founded based on AI back in 2018. Scienaptic actually was doing the AI before AI was really a big thing in the marketplace. the foundation and the roots of some of the AI models that exist today actually started with working with big banks. These models have had the ability to look at data points and look at data from large institutions ever since 2018. So yeah, I like to say we were doing AI before AI was a thing. So yeah.
The reasons why I asked that question is because I also wanted to ask is, what have you learned about change management when introducing AI into a conservative environment?
Oh, wonderful question. So one thing that we do is change management is all about building belief. It's trust, it's credibility, and it's building belief. We have to go in when we do any type of, we have a new client and we do any type of implementation. I mean, change management is a big part of getting the belief and buy-in. It's not just, at the C level at an organization, but it has to permeate through the entire organization. So, one thing we do is when we go in, we don't just go in and say, okay, wholesale changes. Here's what you should be doing. Here's how your underwriting should change. Here's how your pricing model should change. And we don't do that. That's no way to actually influence change. What we do is we'll go in and we'll do some side-by-side testing, and we'll run our models in direct parallel with the way that the credit union has been doing things for the last 15, 20 years, using the same rules, same policy, and just run those side by side for a while. And let's say, okay, let's start comparing results. Because then you can start to see, we call it swap analysis, but really the point for that is to show them, hey, here's the exact model using AI that you're doing now. And there's some missed opportunities. This is the money you left on the table. This is the member that you didn't protect, that you should have funded. And you don't do that in a bad way, but it just does demonstrate that these models work. They work really well. And what you find is when people start to see that, because you have to just let the data speak for itself. You show them the facts, you show them the data, you can't dispute it. That slowly then gives them the confidence that, yeah, this does make sense. This is going to work. And they feel more comfortable then letting go. And then they can take that next step to truly be that underwriter that they should, or that, that employee that they should, to focus on my time on the members that need the time. So that's a big part of our change management. Is a consultant a long time ago said, let the data speak for itself. And that's what we do. And that usually does help with the whole change, knowing that we're not there we don't have a robot. We're not replacing you. We're helping you do your job better. It's that enhancement.
Just highlighting something you said there was missed opportunities. Of course, in our business, there's also missed opportunities. I think in every single realm, there's always missed opportunities. But how do you, as a group, as a team, tend to bounce back from those missed opportunities?
Yeah. So I think when you think about, well, first of all, let's take it two perspectives. Number one, when we work with missed opportunities, when we work with credit unions, we'll show them that these are missed opportunities and that the models work. What that does lead to eventually is the belief that if we start to make some changes to the model, we're going to have fewer and fewer missed opportunities, because over time we can make model changes to the model that extend more credit, and then they start really believing in this particular platform, and they have fewer and fewer missed opportunities. So on a credit union perspective, they see, they learn, they believe, and then they adjust. So missed opportunities there. But I'm going to take this question to another little different area, maybe, because when you think about missed opportunities for us, I think what we do is, as an organization, as individuals, we look at, okay, we have either missed opportunities related to, and I hate saying this, we didn't get that sale, or we have missed opportunities as it relates to, maybe we missed a rollout of a product or a timeliness of it, whatever. I think for us, it's all about listening. So we're making sure we listen to our QSO investors. We're making sure that if it's a product roadmap, that product roadmap is aligned with, what we're hearing from our clients. And I think we have learned, we don't make any assumptions about us thinking that we're smarter than the marketplace, because the marketplace can be very humbling. If you ever think you're smarter than the marketplace, you're going to learn fast. You're not. So that can be very humbling. And so I think we've learned, all organizations learn that way. I think for us in particular, we're very good at, if we feel like we've missed something, we had a missed opportunity, we reflect, we get data, but then we move on, because nowadays, fail fast, learn from it, and move on. I mean, kind of agile methodology, but 101. But and I just, as an organization, we're really good at that. Not that
Yeah,
we're not good at failing, but if we do, we move fast. I'll say that. How about that?
I think a lot of businesses like to fail, and then you know how to kind of adapt quickly, and then end up just stuck in that failure position. So even within our business, we said if we want to fail, then sure, we learn from it quick, and then we adapt
Exactly.
very quick.
Very quick, very quick. Because dwelling on it does nothing, right? So you learn.
Said from a very young age, you can't cry about things you can't change. So you just have to kind of move on and keep pushing on regardless, for sure.
Smart lady, very smart lady.
She is. Shout, mother dearest, for sure. Patrick, I was also going to ask, so how does AI help credit unions that serve thin file borrowers or gig workers or young members?
Great question. You guys have done your homework. That's awesome. So when you think about traditional FICO scores, bureau scores, they just don't hit people that have a thin file, gig workers, people with no files. And that's a big miss, because especially in the gig economy, there's a lot of people out there that, their credit score, the traditional credit score, may not show the big picture. What our solution is able to do is we call it a 360-degree view of an individual. So, I mean, we can look at up to 3,000 different data elements on one individual member or consumer. And when you do that, when you get that 360-degree view of a person, not just what, a traditional bureau FICO score could do, which is, they're taking maybe a sliver of that. They're looking at, I don't know how many elements, but they're only looking at not 103 or 160 degrees. They're looking at 40 degrees. I'm making that up, so don't quote me on that. But we're able to look at this because we can look at, things like the cash flow analysis. We can look at rent payments. We can look at, pay alternative data that shows, boy, they pay their cell phone on a consistent basis. All of this stuff that is not captured anywhere else. When you get that 360-degree view and you see behaviors, the models start to look at and start to send signals and get these signals that this individual's behavior is consistent with someone that would be a good risk to extend credit to. That alternative data allows us to approve, oh my gosh, up to 90% of people with thin files, or make decisions on people at 90% with thin files. We're able to look at people with no credit score and make render decisions on that as well. And that is huge, especially in this gig economy that we've been in for a while. And that is truly goes back to what I mentioned earlier. That's fair and inclusive lending. I mean, bureau scores have this inherent bias, and they're biased towards AA plus paper, AA plus borrowers. And there's a lot of people out there that aren't A or A plus, but are a good risk and will pay back the loan. So that fair and inclusive, strategy that we take with our models, being able to look at 3,000 data elements and get that full picture of an individual, helps us be very successful and helps credit unions be very successful in approving those loans or extending credit to the ones that need it. So that's how it works.
Oh, that's amazing. Would you say that's more contextual underwriting, and then in comparison to how the traditional credit scoring is? Yeah.
Yeah, absolutely. Because we're able to look at that individual as a whole. We're able to look at local data, and that contextual underwriting then goes back to these models that keep learning, and they keep getting better and better. They keep learning about behaviors of individuals, because these models are self-learning. That's why they call it machine learning. And, so it's that contextual analysis that really helps, these models get smarter and really detect the behavior that is looked at for, credit extension for approvals, and what have you.
Nice. I just want to tap into that passion side a little bit more, Patrick, if you don't mind me doing so.
Yeah, absolutely. That's the best part. That's the fun part.
That is. So where do you see the new opportunities for AI-driven lending beyond like today's market?
Yeah. So I see, we talked about it a little bit earlier. I think you'll see fraud be a big part of it, number one. Number two, I think you'll start to see AI kind of permeate a little bit throughout more of the, if we're talking credit union specifically, throughout the credit union organization. So if you look at, within a credit union, look at the different, verticals within the credit union, you can look at, obviously there's finance, there's operations, retail, all of those things. You see AI a lot now, obviously on our side, on the lending side, kind of that retail side. I think AI is going to start to be more involved on some of these different verticals that exist. You'll start to see it kind of become more into that, the finance area, into operations, you name it. And it's all to drive more efficiency. Again, not to get rid of people, but it drives efficiency and it provides a way to provide more insights into their organization. So it kind of started with that retail vertical, and now you start to see it kind of transcend through the other verticals that exist within that credit union. I also think you'll see it on the retail side specifically, just get smarter and smarter around, extending different solutions or extending different products to members, truly ensuring that when a credit union is making an offer for a product, it is 100% personalized and personal to that member. It's not just, oh, they don't have a credit card, let's give them a credit card. No, it's going to understand the behavior of that member and offer products and services that are absolutely appropriate and tied back to that individual's behavior. So that it's not just a product push, but it's actually truly customized and personalized for that individual. So I think you'll continue to see enhancements on that on the retail side as well.
That's amazing. Much appreciated for that insight, Patrick. And I think that kind of leads us naturally into the future, of course, not just for members, but also Scienaptic itself. I know you kind of often share metrics like higher approvals or lower delinquencies. How do those results kind of shape your growth priorities?
Yeah, absolutely. So we're starting to see scale. We're starting to see really great traction in the marketplace, and we're continuing to scale this business. Primarily, we serve credit unions. We do serve some other markets, but you'll see growth in Scienaptic as we think about a small business. So credit unions that are continuing to grow are doing more work in SMB. So how do we help credit unions with, this same type of experience, this same type of, platform on the small business side for those members that are, have small businesses, have commercial. That's where we're expanding there. We're expanding into agentic AI. We're expanding our fraud solutions. So we start to see, and then we also start to look at how can our models also adapt to credit unions that, who knows, maybe some credit unions want to take on more risk. How could the models adapt to that? And so that, from a product roadmap perspective, is going to continue to help us scale into the future. As we continue to drive more success, obviously, more people and more credit unions are investing in our organization. We're continuing to have success adding clients. And so as that growth continues, we're just looking to really expand, our solution set to ensure that we're meeting the needs of all of our clients and all of the credit unions that we serve, and getting into, different types of lending and that have different types of needs. So that's where we see it going. So it's pretty exciting, actually. In fact, as a QSO, we've had recently, credit unions actually call us and ask, hey, can we invest in you? So absolutely. So that's much better than having to go out and solicit investors. So that's a good problem to have.
No, it's 100% exciting for sure. But just on the topic of actually expanding, I wanted to ask, how do you how do you factor in partnerships as you are growing?
So partnerships are key to our organization in various ways. Number one, you have to be able to integrate with all. If you think about the ecosystem within credit unions, you think about all the tech providers, and you think about, just how many. It's kind of scary how many different vendors and tech providers that one credit union could have. I mean, it's imperative that they work together to provide that experience. So we invest a lot of time and a lot of effort from an integration partnership perspective, because we want the experience for the credit union and we want the experience for the member to be seamless. And so, whether it's through API calls, you name it, that integration partnership is highly important. And we place a lot of emphasis on that. And we have invested a lot of time and money into those integration partners. Additionally, what you look for is partners that can provide some synergies. Sometimes you look for, we're looking for referral partners, resellers, things like that. But it's looking for products and services that have a synergistic perspective. So you think about some of these aggregation providers of lending, and there's companies out there that are really kind of out on Google and all these other websites that are trying to grab potential loans, bring them in this aggregator perspective, and then give them back to credit unions. So, how could we work with some of those organizations? So we spend a lot of time and have a very strong partnership strategy, because if it helps make a seamless experience for the client, for the credit union, then absolutely we want that. And that's a big focus of any of the partnerships that we focus on. So yeah, it is critical to the business.
That's amazing. But Patrick, this has really been a fantastic conversation. So I have to ask, before we wrap up, if you had to give one advice to credit union leaders, or one simple action they can take this quarter to improve more members fairly and confidently, what would it be?
Number one, I would say AI is here. It's here to stay, and it's only going to get better. It's only going to get stronger. I mean, it is now time to adopt, and it is time to get on the bus. You'd rather be on the bus than the horse, right? So let's make sure that, right? So it's time to get on. And there's no better time to incorporate that's fair and inclusive, that's going to help a credit union fulfill their mission. And, an AI solution can absolutely help that, like Scienaptics. So yeah.
Also like Navvai, no, I'm teasing.
Exactly.
I had to throw it out there now, but Patrick,
Yes.
honestly, it's been an incredible conversation. So for our viewers listening, if they kind of want to learn more, kind of see what you guys are getting up to, what would be the best way for them to reach out?
You can obviously go to our website at Scienaptic.com, or you can drop me an email at patrick@Scienaptic.com.
Patrick, once again, really did appreciate your time on this conversation. We did thoroughly enjoy it. And that's another wrap up of the Navvai Shift. Again, Patrick, much appreciated for your time.
Great. Glad to be here. Thank you.